Lee, good afternoon to you. Thanks so much for joining us. I guess my first question is a sort of big picture question about the markets and the themes that from your seat you've observed in 2020. Huge, big daily moves. Will that be the norm, and what has led us to that point?
Well, what's been happening at Tradeweb for a number of years is we've seen an acceleration of the market moving into electronic trading. And as this year turned and we hit the COVID crisis by March, extreme volatility really spiked our volumes to a point that we were trading a trillion a day on our markets, which, to put in context, is 50% more than all of the U.S. equity markets. So volumes have certainly surged as volatility has surged. And what we're really seeing now is a change in behavior. As people are working from home, all of our clients are trading from home. We're seeing even more of a change in acceptance of moving into an electronic and a digital environment.
So have you benefited more than, say, the traditional brokers and banks that may in the past or still today have done a lot of trading over the phone, or in fact, are you kind of partnering up with them?
Well, I think it's both. I do think we are benefiting with this acceleration. Certainly, the move to home in and of itself, we have over 10,000 traders that went from an office environment that are our clients into a home environment virtually overnight. That went incredibly well for Tradeweb and the team at Tradeweb. And so we've seen an acceleration and an adoption, a greater adoption of electronic trading as a result of the changing environment.
Lee, the electronification of trading, so to speak, swept through equities starting a couple of decades ago. Fixed income has sort of followed a similar path in the last few years, but there's always been a sense out there that perhaps fixed income products and non-equities would not be as suited for this type of trading, whether because they're more buy and hold, or they're more issuer driven, and also just they don't necessarily, not every bond trades every day, for example. So is it the case that there are impediments to having this go fully electronic and digital?
Well, certainly the bond markets and the derivative markets that we're in are complex markets, and they are all, there's a variety of different markets within the scope of bond markets. So government bonds, for example, have been trading very electronically for a number of years. The credit markets, corporate bonds, have been moving more to an electronic footprint because of the diversity of the bonds. The number of bonds has made it a little bit more challenging. But what we're seeing right now is really an additional phase, an acceleration into the electronic environment, both from a couple of obvious reasons. One is it is a real cost savings. The second is it's a tremendous efficiency. And when you couple that with the environment we're all in now, which is working from home, these efficiencies really are very extreme and benefit people. And I think we're now starting to see what I would say is fundamental behavioral change, and folks are much more comfortable interacting electronically.
And we mentioned the business of portfolio trading of bonds, trading big blocks of bonds, facilitating some of the flows in and out of exchange-traded funds. There has also been a little bit of a concern about fixed income ETFs, just as a category, as you know, the idea being that the ETFs themselves trade so freely every day. In normal environments, it's perfectly fine. But if there are stresses, the underlying instruments themselves, the underlying bonds, don't trade as well, and that could create dislocations. And how are you kind of navigating that? Do you think that that's still a risk?
Well, on Tradeweb, we have a significant electronic ETF business in addition to a corporate bond business and a government bond business. And I think what we're starting to see is those markets become interconnected electronically. And this is a huge advantage. If you envision the thousands of institutions around the world that are on Tradeweb's network and are able to trade between ETFs, between corporate bonds, between government bonds electronically, it allows for new types of entrants into the market to provide liquidity, to interact with other market participants. These are algorithmic traders. These are different kinds of institutions. And as the markets become more transparent and interconnected, I think it creates a much more a safer environment and an environment that allows for a greater velocity and movement within the market.
Lee, it's Morgan. I think the last time we spoke was just over a year ago when the company was going public, so it's good to see you again. I'm curious about this explosion of debt that we've seen, not just on the corporate side as companies look to raise more capital to weather coronavirus, but also just in terms of government spending, whether it's fiscal, whether it's central banks and all the monetary stimulus that's out there in the world right now. How much of a tailwind is that for Tradeweb?
Well, for sure, that's a great point. There are literally, it's in the trillions, the amount of debt that's being issued by governments around the world, in the U.S., in Europe, in Asia. Tradeweb started off as a government bond trading network. So the fact that we play such a significant role in the whole ecosystem of trading in government bonds around the world, the fact that there's more issuance makes our role that much more critical, because we're effectively connecting all the different parties to interact electronically. So we have seen, and we're able to kind of, observe, as there's more issuance in general, there's more secondary activity. And obviously, as a trading platform, a toll taker, essentially, the more activity there is, and certainly the more volatility there is, the better it is for our business.
Lee, thank you for joining us today. We appreciate it.
Thanks for having me.